Alright, I've had some problems with my new Windows 8 machine as far as recording class, and so this is a separate program I'm using today. I'm going to be going over, this is our Forex blog for December 14th, 2012. The first step of our easy three-step Forex trading system is to use our currency meter and buy the strongest currencies like the Euro, the Swiss, the Australian earlier in the day, the New Zealand earlier in the day until about 3. You want to buy those against the weakest ones, which was the yen, and it also was the dollar starting the day off. You should always look at the daily and hourly or longer term chart to get a feel for how much up or down a currency is. If it's been up hundreds of pips and or 3 to 5 days in a row, you're going to need a deeper pullback before it's safe to buy, even though our statistical tools are showing that the euro dollar is very strong. The reason for that is I've made the tool easier to use by incorporating some of the daily, weekly, monthly trends. And anytime the daily and weekly, monthly trend is so strong, you can have a short-term pullback, and it's not going to really reflect on this. This is kind of designed to give you a longer-term perspective and to let you know whether it's safe to buy the lows of the euro dollar, which it is, and the yen especially. So if the euro yen falls, you want to buy a decent support area. That being said, let's bring up the longer time frame charts and we will go over how to do that. Okay, here's a euro dollar chart. We're going to hit period D to take a look at this on a daily basis and hit the minus key to zoom out. So you can see that this has been trending up quite strongly over the last few months. It had a decent pullback. It rallied up, came up to the highs, couldn't break it. Had a 3-day pullback, which anytime you draw your fibs on longer time frame swings, you'll see it was a fib area. Pretty much 50% pullback right there, and now it's going up again. So from the daily chart, you can see it's been up 3 days sideways, and today's the fourth, actually fifth day up because it slightly went up yesterday. So that being the case, you might get a deeper pullback before the trend continues. So draw your fibs on the high to the low of the last move, and also from the high to the low of the last slightly longer time frame move, which is right here. So we'll make that one a little thicker. And so you can see from yesterday's low to today's high, today it pulled back to the 62% fib, and it also pulled back to the 38% retracement of the last 2.5 days move up. So you can certainly look and start buying currencies when they are showing strength and weakness, but without looking at the longer time frame trend, you're going to probably get into some bad trades because it's going to need a deeper pullback. So in this case, you can see it pulled back earlier in the day and went up. It's riskier to buy up here because it's already been up 4 or 5 days in a row. Look at that 3070 area. That is the fib area of the last 2 days and also the last 2.5 day move up. Major support there. And I'm not saying that you should buy this support area the first time down because the real-time momentum tools were weak. But when it comes down and double bottoms there and can't break that area, that is a sign to the professional traders that support has held. The biggest traders out there are buying this very likely support area, and because of that, that's what led to this move. So basically, some of the best trades to do today, and it's certainly okay to do counter trend trades too, but it's usually only safe to sell above the upper white band, so which is our containment band. So this buy right here, it went up, hit this area, you wait for a deeper pullback. I wouldn't have bought here because it fell so with such weakness. The double bottom right here, it was going sideways when it broke above this little high right here at 77. That's a decent place. Buying this pullback right here, anytime it goes up with a lot of strength, the pullback has almost no weakness. That's a very high probability trade. Took off, and you can see our trailing stop would have got you out there. And if you really believe in the trend, you can go to a 5-minute chart and use the chandelier stop on a 5-minute chart, and you will see probably kept you into almost the entire move. Got you out right here around 63. Huge move in the euro dollar. Same exact thing happened with the euro yen. Let's first bring up a longer time frame chart, period D, and you can see that this one also has been trending up very strongly, and before today it's been up 1, 2, 3, 4 days in a row. That's a very strong trend. So that being the case, you are going to probably want to be buying pullbacks earlier in the day rather than just try to buy the highs without seeing if support is first held. So here's the 2-day trend from yesterday's lowest low to today's highest high. You could obviously try to get into a trade at 109.47. If that fails, you either look for the 50 or 62%. 62% held, and really if you go back to the next swing level, it's all the way back down here at the lows. It really never stopped when it started going up, 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 up. This was the first little tiny pullback, made a higher high last night's session, and so this is really somewhere between the 50 and 62% fib is where you want to be buying this one. So let's bring this up and take a look. Earlier in the day, you can see that's exactly the case. This thing's already up so much, and it's above our upper band. You might want to wait for a deeper pullback. If you hit the minus key, you can draw fibs on this chart as well. From this low to this high, 38% would be the minimum amount, and you can see it tried to go up here and went up about 15 pips, came down, found support the previous day's high, the 50% retracements right there. It went up again, and then it pulled back and it found support at this much more likely 62% retracement of the last big move up. It found support and it exploded. Now later in the day, this is just from this little tiny swing to here. Later in the day, it came down and found support at the much more likely low of the day, 109.15 area. Anytime these areas get hit, and again you have a nice double bottom right there, it's off to the races. And this one also happened to be a little bit higher probability than the euro dollar, because this one's actually right near the lower bands. You can see how strong the weekly monthly trend is on this. It's a very high probability place to buy. Fibonacci area, our lower statistical likely low, and also this one just took off, and our even our fast range-based trailing stop kept you all the way in here till 80, just ripped up. I am going to be in the next week or two releasing a live room for our traders. There's some new tools I've been developing that use other data feeds to predict currency markets. They're very expensive, probably an extra $180 a month. Most people aren't going to get that, so I may not release a tool, but I'm going to create a live room and kind of let people know what levels I'm looking to buy and sell at, and what they're basically telling me to do. I've been trading a lot more recently, and in the last few days I've taken 5 trades from this new tool. 100% of them have worked, 100% success rate. So the fact that most people aren't going to be able to benefit from it because of the expensive data, I'm going to create a live room and let people know what I'm doing so you can benefit from it as well. That'll obviously only be available to people that have accounts or leasing the software or who have bought the software.